Migration from SME platforms to the main board has fallen from 65 in 2021 to just 3 in 2025. That is not a routine slowdown, that is a structural signal. So the real question is, are SME platforms collapsing or are they just maturing? I believe we are witnessing a structural reset, not a collapse. So, what we need to do is go back to the original design and try to understand what's happening. We need to go back to the original design of the SME platforms. The SME segments of the National Stock Exchange and the Bombay Stock Exchange were never meant to be permanent destinations. They were stepping stones. The idea was simple: list on the SME platform, build, scale, improve governance, strengthen profitability, then graduate to the main board. It was a runway, not a resting place. So, if that was the structure, what changed? What disrupted that pathway? So, over the last 2 years, migration norms have tightened significantly. Minimum listing tenure has increased. Profitability thresholds are higher. EBITDA benchmarks are deeper. Market capitalization requirements have risen. Public shareholder requirements have expanded, in some cases up to 1,000 shareholders. Compliance scrutiny has intensified. Migration is no longer procedural, it is performance based. Earlier, many companies treated SME listing as a fast track. Today, exchanges are effectively saying, prove your resilience first. That's not hostility, it's a filtration. And that changed investor psychology. Now, here is the most important shift. Once the once the filters strengthened, investor psychology changed. So three forces are at play. Three. First is liquidity, of course. SME stocks operate in high beta, low float environment. When sentiment is positive, prices move sharply upwards. When sentiment reverses, liquidity evaporates quickly. Second is retail participation. Higher ticket sizes and risk aversion have reduced participation. And SME platforms are extremely retail sensitive. Third, migration uncertainty. So earlier migration was assumed, today it is questioned. And once migration probability becomes uncertain, valuation models change. Investors are now asking, can this company sustain 10 to 15 crore EBITDA? Can it build a genuine shareholder base? Can it maintain governance discipline? Can it truly graduate? Migration readiness is becoming a valuation metric, and that is a structural shift. So now some are blaming foreign institutional investors for the correction in the market, especially the mid cap and SME stocks. But SMEs typically do not have deep FII ownership. If valuation expanded excessively, that was because of domestic optimism. If they are correcting sharply now, it is domestic risk aversion, I would say. So that introspection is healthy. Markets are not punishing SMEs, markets are recalibrating expectations. So the bigger data point is, and let's step back for a moment, between 2015 to 2025, more than 1,400 companies listed on SME platforms, but barely a quarter managed to migrate, which tells us something important. So, migration was never automatic, it had to be earned. The correction slowdown is simply making that reality more visible. So, the real test of 2026 is listing is relatively easy. Sustaining value is difficult. Public markets demand profitability, depth, cash flow, liquidity, governance and transparency, shareholder distribution, migration by BT. Strong companies will survive this phase. Weaker balance sheets will struggle, and that is not a weakness of the platform. That is how capital markets are meant to function. Then 2026 will not be remembered as a crisis year. It will be remembered as the year the SME ecosystem matured. But maturity does not happen automatically. It requires preparation. If migration is becoming the new valuation metric, a new valuation anchor, then companies must prepare for migration from day one. Not after listing, not when liquidity dries up, but from the moment they enter the public market. Because public shareholder distribution is no longer just a compliance requirement, it is a strategic requirement. Many SMEs today are fundamentally strong but struggle with structured investor outreach, shareholder diversification, and sustained public market engagement. And this is precisely where ecosystem infrastructure becomes critical. At BRite Exchange, we are building structural digital engagement frameworks that help companies expand public shareholder participation, strengthen investor visibility, and improve migration readiness over time. Because listing is an event, but building a public market presence is a process. If you are an SME promoter or merchant banker thinking about migration 3 years from now, the preparation must begin today. This is Rana Aryan, founder, BRite Exchange.